Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, so yeah, the markets were under pressure, but there were still quite a few stocks that were delivering nice percentage gains. Yeah, it's a stock picker's market right now, so it pays to be selective. And first up is ECYT. Okay, this is on a beautiful run. It closed up 22% today. RSI is at 93 and Fasto's at 91, so they're both very frothy. There's not a lot of juice in the tank, but it is pushing higher. As you can see here, it closed above the middle Bollinger Band back on the 20th of February, and it started riding EMA4 support. That's the pink line. It's been riding every single day since the 20th. So you know, basically, if it's holding EMA4 at 920, the signal is to keep riding. If it drops below, that'll be your signal. It's finally cooling down, and you could see EMA8 at 810 tested. You can tell today's candle is pushing through that upper Bollinger Band, so it might work its way back into the bands. Notice the really good volume down here, big volume behind the move. And now if you look at the weekly chart, you can see here the nice breakout last week above the 300-week moving average. That's the blue line. And then the week before, it had broken out above the red line, which was the 200-week moving average, and the dotted purple line, which is the middle Bollinger Band. So it's on a really nice, what looks like a 6-week run here, breaking multiple moving averages. It's currently trading above all the moving averages on the chart. This week's candle is pushing well above the upper Bollinger Band. If it pulls back, you want to see EMA4 at 8 hold. It definitely want to see it stay above the 300-week moving average at 684 now that it's above that level. You have to go all the way back down to 2013 to find the current resistance level. You can see this was support back here at the end of 2013. You know, also a support level from 2014. That's the 11 to 12 resistance zone that is hitting right now. If it could bust through that, you could see the upside potential. You know, it had previously traded as high as up here at you know, hit the mid to upper 20s. So yeah, there's upside potential, but it needs to break through that 11 resistance zone. If it stalls out here and it fails to break 11 and 12, it might pull back to test that $8 support zone. Okay, let's look at SSC. This is a stock that was alerted last night in last night's video. So congrats to everybody that caught this before the market opened today. It did close up 17%. With all the Bitcoin blockchain related stocks that we're running, you know, this was on our radar that it might heat up. It didn't have a good technical setup. This was just when there's a sector-wide rally, they tend to go down the line, and this was one that had not participated yet. And then today, boom, here came the volume. You know, the volume came in, and it did close above EMA's 4 and 8. If it can stay above 181, above the pink and lime lines, that'll signal it's in play. It also closed above EMA 13 at 192. That's the orange line. The last time it closed above that level was back here on the 14th of February. It failed to hold and it pulled back. So going forward, if you see it drop back below EMA 13, you could see the potential downside risk when EMA 13 fails to hold. So it needs to stay above that level. The next target to the upside is the middle Bollinger Band at 219. If it can turn the level into support, it could get a new uptrend going. Just above is the 250 or the 200 and 300 day simple moving averages. Notice the big volume spike today. So yeah, it needs to basically break $2 and stay above 190 to remain in play. Okay, let's look at ZSAN. This is another one that we've been charting, you know, during the breakout the last couple of weeks. And so it came back and it tested the EMA4 yesterday, and it held that level. And then today it closed back above EMA4 at 1582. Okay, that's the key level to hold. That's the pink line here. If it closes below 1582, that's when it could drop back down and test EMA8. You can see the lower wick on today's candle tested that level. A drop below EMA8 would be a signal, okay, yeah, it's not heading higher. And that's when you could see a drop down to that 100-day simple moving average at 1091. It's struggling right now with the red line. That's the 200-day simple moving average at 1674. Failed to get above that 200-day simple moving average is going to signal a temporary top. If it gets a close above, then the next key level to break is going to be the 300-day simple moving average at 22. Okay, let's look at RAS. This was another one that was alerted last week in our chat. You know, we cover these plays on a daily basis, and you know, a lot of these stocks are familiar names just because we've been charting them for so long. If you look at RAS here, it's back above 50 on RSI, and yeah, last week it was heating up, and we had put out alerts about the break above EMA's 4 and 8, and then you know, it followed through on Friday with the close above above EMA 13, and then today it had the big push. The big move today was the break above the middle Bollinger Band, the dotted purple line at 27. That's a key level to hold, and then above the bottom of the gap at 32. It did run all the way up to the top of the gap at 44 here. That's the bottom of this candle, and it filled the gap and pulled back, and so that is a red flag. Following a multi-day run, notice the giant volume spike today. This looks like a climax spike. You know, they were taking profits and it pulled back. It needs to close above 44 to head higher. Failed to break the top of the gap, and then now it's hitting the 1500-day simple moving averages. Failed to get above 38, and it could pull back to test this bottom of the gap support level at 32. Okay, so yeah, it failed to get above 38 and 40. And 32 will be on deck. If it breaks below 32, it could test that middle Bollinger Band down there at 27. Okay, let's look at PTI here. Okay, so this was had the after hours news. This was another one that we alerted last week. It had the good FDA news after hours yesterday, and today it created a big gap up open. And then notice how the open, put it just above the previous resistance zone. You can see here this was the double top level. We discussed this in last night's video. It hit a top, pulled back, hit the top again, and today it did stay above that 620 level, so that's very good. Now if it drops below 620, that's when it could drop down and test the 300-day simple moving average at 559. It needs to stay above that level. If it drops below the 300-day simple moving average, that's when it will signal that it's going to consolidate. Today's candle did form well above the upper Bollinger Band, and many times when that happens, the candles work back into the bands, similar to these two candles here and how the candles work back into the bands. And so yeah, if it can stay above that 300-day simple moving average, the big level to break is 7. It has to bust through $7. A drop below 720 would be your clue that it's cooling down. Notice there was a giant volume spike today. The last time that it had a giant volume spike, that was followed by red candles, so keep that in mind. This is a spinning top indecision candle. When you see this form after a big gap up open, the safest thing to do is lock in gains, especially when you see this many volume bars in a row and a climax spike. Okay, let's look at TR. You have to keep in mind that these small cap biotech companies, they use the FDA news to sell shares. Okay, so keep that in mind. Okay, TROV, ticker symbol, up 23%. It's been heating up. Okay, so it filled the gap over here. It has a gap between low of day on this candle in December and high of day on this candle, and it created this upward channel. Today it busted through the top of the channel and it closed above the gold line, so that was a really strong move. If it can stay above the 100-day simple moving average at 455, that's going to be your signal that it wants to head higher. It needs to stay above 455 now. If it can, then we'll be looking for it working back its way back up to that 200-day simple moving average at 666. If it fails to stay above the 100-day simple moving average, the risk is it drops back into this previous channel, and since it's the top of the channel, it could work its way back down and test that 50-day simple moving average and middle Bollinger Band. It needs to stay above the top of the gap level. Basically, it needs to stay above 41. If it drops below 45, to be a good setup, it needs to stay above 45 now. But yeah, that was a nice close and a good push. It is on a 3-day run. Keep that in mind. Okay, let's look at CYTR. All right, so this is on a big run as well. Notice how it's formed 6 green volume bars in a row. Today it closed above the 100-day simple moving average as well, just like TROV. Okay, the last time it got above the 100-day simple moving average was on the 23rd of January, and notice it was a gap down open. People that held got punished. It's just never any fun when the market makers do that to you, and it was probably for no reason other than it was overextended above that upper Bollinger Band. That's why it's always a risk to hold. You know, yeah, there's not much you can do when they gap it down. That's the risk on this setup here, is that they have a gap down open similar to this setup, and the candles work back into the bands. Notice over here when it got above the upper Bollinger Band, it pulled back. So this is a history of pulling back. It's been riding above the upper Bollinger Band right now, so it has this really bullish pattern. If it can stay above the 100-day simple moving average and EMA4 at 187, that'll signal the uptrend's intact. If it could push above $2, the big levels to breaks up here around 227, this high close from back on the 23rd of January. Okay, let's look at SPEX. Okay, this was up big today. notice the long upper wick. So it ran all the way up to 240, but it dropped all the way back into the close. Ended up closing close to the open, and so it formed, this indecision candle here. Notice the very low average daily volume, and then all of a sudden you have volume today. Well, this long upper wick signals dilution. Yeah, I could just show you real quick. Yeah, it's always good end of day to check out accumulation distribution, and this will show you, in shaken money flow, and they'll show you that they were dumping shares into the rally, even though it was up 54%, and you have this big giant volume spike. Look at accumulation distribution. A huge drop off the cliff. Look at the big drop here on CMF. How did I know those were going to be spiked down and I hadn't looked at them today? It's because of the long upper wick. This long upper wick is your signal to head to the sidelines, head to the exit, especially when the average daily volume is super low. The company can't sell shares unless there's a catalyst like a news event, and they use the news event today to dump. As you can see here, that there was a big unload at the open. This is what we call the climax spike. It did give everybody a chance with this double top, breaking back above and topping back out. Now going forward, if it can get above the middle Bollinger Band at 208, that's going to signal that it wants to head higher. The downside risk level is at about 193 or so right here. If it drops below this low close today at 11 o'clock, then that lower Bollinger Band will be on deck at 187, and then the big downside risk is that it drops all the way down to the 50 simple moving average at 170. So above 210 signals upside potential, and then it needs to break above this 232 high close at 1245. If it drops down below this 193 level, it could drop all the way down to 170. Okay, that's why we like to exit when we see this type of candlestick pattern form on the daily chart. Yeah, let's look at AMMA. It closed up 21% today. Yeah, this is a stock that had a big pullback as well. Notice it does have this gap way up here. You have the bottom of the gap and then the top of the gap, and so basically looks like around 90 cents is the top of that, or bottom of the gap level. It had a gap up open today, and it ran up to the 50-day simple moving average at 79 and pulled back. It has to break that level to head higher to test the bottom of the gap resistance zone. Notice how 90 has been this huge resistance level, so that's going to be very tough to break. There is a gap between high of day yesterday and low of day today. And this is the same ugly candle as this candle. It's just smaller, and so this is a really nasty. This is what you want to see. They use that gap up open and run to 79 to dump shares. It needs to hold 61. If it drops below 61, the middle Bollinger Band, it could fill the gap and drop down here. The only way that this is a good play is if it turns the middle Bollinger Band into support. Okay, it has to get above the 50-day simple moving average to head higher. Let's keep an eye on HEB here. It's back above 50 on RSI. So it formed this descending triangle pattern. You can see here this is descending resistance. So it's hitting this resistance here, and notice how it hit that level again today, and then it has horizontal support. You've got this triangle type pattern here, right? And so one of two levels are going to break. It's either going to bust through resistance or it's going to drop through support. So that when you have this type of pattern and it's coming to a flex point, it makes it real easy. A break above 53 signals to ride long. It will have to get above 55. That's that high close on the 26, and then a drop below 46 is going to signal downside risk, and it could drop all the way down to this 40 to 41 support zone where the 100 and 200-day simple moving averages are. Many times it's best just to wait for that break above resistance. Now it did close today back above the middle Bollinger Band and the 50 and 300-day simple moving averages after trading above EMA's 4, 8, and 13. And so that was the first time it did close above those levels in this candle. But it's a signal that it's heating up. It might make this kind of move back here. We're not sure, but keep a tight eye on 46, and yeah, it'll be a risk to hold if it drops below. Okay, let's look at another one of these small cap energy stocks. I've been posting lots of these lately. HUSA is another one. RSI is at 57, so it's heating up. Fasto's at 72, and so today it hit that 50-day simple moving average, the green line. It actually closed just above, by a fraction of a penny, and so if it can stay above that level, turn 30 cents into support, the next target is is the 100-day simple moving average at 339. Now back here on the 12th of February, it closed above the 50-day simple moving average, and that level failed to hold and it pulled back. So now we're looking for a bullish change in trend. Notice all the times that this 50-day simple moving average has been tested and it's failed to hold. So if it finally does, that's going to be your signal to take it for a ride. If it can get above that 300-day simple moving average, it could possibly run back up, or the 100-day simple moving average, it could run up and test that 300. First things first, though, if it fails to break this descending resistance here, the 50-day simple moving average is lined up for the descending resistance line on this chart. That'll signal downside risk, and that would put that middle Bollinger Band at 28 back on deck. And finally, keep an eye on MYSZ. You know, this has been cruising here. It's got RSI at 55, Fasto at 52, so it's not overbought. What looks interesting to me on this chart is today's candle is right at a flex point. Check out the green line here. This is the 50-day simple moving average currently at 172. And then the blue line, that's the top moving average, the 300-day simple moving average at 180. Today's candle is right in between those two levels. And so basically, if it can break above the blue line, above 180, that's going to signal it wants to head higher. It tried to get above that level in February and failed. You know, that level was huge support back here, and then it broke. And now it's testing that again. So keep an eye on it. Tomorrow could be the day that it breaks out above. Now, if it drops below, yeah, it breaks 164. That's EMA 13 here. That's going to put the middle Bollinger Band at 155 on deck. It has to stay above the middle Bollinger Band. Basically, you want to see it still stay above EMA 13 because that's been holding ever since the middle Bollinger Band broke over here. So keep an eye on MYSZ for a possible break above that 180 resistance zone. Okay, a close above would be bullish. All right, thank you very much for viewing this video. Come check us out in our chat. I'll post the link below the video. Thank you.